500,000 Naira went into the GT Equity Income Fund over 5 months. Today, the position is worth 500 362 Naira. The market delivered 87,683 Naira of that. And the worst single day inside that window was minus 4.87%. This is my Naira Journal recap of the first 97 days. The numbers are public. The lesson is not where most viewers expect it. Disclaimer: this channel is not financial advice. It documents Diaspora Nigerian research into investing back home. What works, what does not, where the friction is, education shared openly. The journal is a real position in the GT Equity Income Fund, a Nigerian equity mutual fund managed by GTO Asset Management, the asset management arm of Guaranteed Trust. I started on the 4th of February 2026 with 100,000 Naira, then added another 100,000 on the 17th of February, another on the 9th of March, another on the 7th of April, and another today, the 11th of May. 5 deposits, 5 months, 500,000 Naira of fresh capital, paid in monthly chunks. The total value in my account this morning is 588,362 Naira. The instinct on a number like that is to call it a 48% gain. It is not. Most of the increase is my own cash going in. The market delivered the difference, and the difference is what this recap is actually about. Start with the first month. The first 100,000 went in on a Wednesday in February. By the second deposit on day 10, the position had grown by roughly 5,000 Naira on its own. Small, but already a signal that the fund was working. The second deposit pushed the total to 220,000. Day 11 sat at 220,500. Quiet days, boring days, the kind of days the channel tagline is built around. The Central Bank of Nigeria, meeting on the 19th of February, cut the monetary policy rate by 50 basis points to 26.5%. 11 straight months of disinflation had given the committee room to start easing. That decision matters here because it triggered the equity market re-rating that defined the rest of the recap window. Falling rates make equities relatively more attractive than the treasury bills and money market funds Nigerian investors had been packing in. The Nigerian exchange started running. By day 23 on the 6th of March, the position was at 232,700. 3 days later, on day 24, the third 100,000 went in, and the total touched 332,700. The pattern was set a monthly deposit, then a few weeks of small daily moves, then another monthly deposit. By day 31, on the 18th of March, the position had crossed 348,000 Naira. That was the highest the journal had been in its short life. The math was simple. 300,000 of capital was now sitting at 348,000, 16% on cost basis in 6 weeks. The Nigerian Exchange All-Share Index had crossed 200,000 points around the same time, a record level, closing the first quarter up approximately 29%. By dollar terms, one of the best performing exchanges in the world that quarter. If you have made it this far and the math is making the last few months in Nigerian markets make more sense, hit subscribe. There is a video like this every week, just for those of us doing this from abroad. The next deposit lands in roughly 4 weeks. So does the next recap. Then April happened. The fourth deposit landed on the 7th of April, day 40, pushing the total to 446,000. Then 4 days later, on the 11th of April, the journal had its worst single day. The total dropped from 455,000 to 433,000, minus 4.87% in one session. 22,000 Naira gone overnight. I scanned the financial press for that day and turned up no specific public catalyst, no rate change, no corporate disaster, no headline event. The most material news that week, the National Bureau of Statistics releasing March inflation at 15.38%, a reacceleration that ended the 11-month disinflation streak, landed 4 days later on the 15th of April. Markets sometimes anticipate. More often, they just move. What matters is what I did next. Nothing. I held the position. The next monthly deposit was already scheduled. By day 45, on the 21st of April, the position had recovered most of the loss back to 471,000. By day 49, on the 27th, 494,000. The drawdown was real. The recovery was 3 weeks. Day 50 was the structural pivot of this recap. On the 28th of April, I sold a small position in the GT Money Market Fund, about 3,100 Naira, that had been quietly compounding alongside the equity holding, and rolled it into the equity fund. From day 50 forward, the journal is 100% in the GT Equity Income Fund. The note on that day's short reads, "Committing fully." That decision is the kind that makes more sense in hindsight than in foresight. I had just watched the market deliver a minus 5% day, recover it inside a month, and continue. The thesis was simple. If the discipline is going to be monthly deposits into an equity fund, the cash buffer in the money market fund was a hedge that was no longer being used. Concentration of conviction, not concentration of risk. By day 52 on the 4th of May, the journal crossed 500,000 Naira for the first time. Day 53 sat at 495,000. Small pullback, no story. Day 54 held there. And today, day 55, the fifth 100,000 monthly deposit landed. And the total now reads 588,362. And with you. Now, the structural lesson, the recap exists to teach. What I have been doing, 5 fixed Naira deposits across 5 months, regardless of what the fund's net asset value was on the day of each deposit, is Itokuike, Naira cost averaging, NCA. The mechanic is straightforward. When the fund's unit price drops, the same 100,000 Naira buys more units. When the unit price rises, the same 100,000 buys fewer. The cost basis averages out across the cycle. The day 42 drawdown is the structural test. A lump sum investor who had put all 500,000 Naira in on day 1 would have been down roughly 24,000 on the 11th of April with no ability to do anything about it. The cost averaging investor, me on this schedule, had only 300,000 of cost basis exposed by then. And the fourth deposit had landed 4 days earlier at a price that turned out to be near a local peak. Not perfect, but the next deposit in May would land lower if prices stayed lower. The mechanic protects against the worst version of bad timing. For you watching this from the diaspora, earning in CAD, USD, GBP, or euros, and remitting back monthly. Two layers of cost averaging stack on top of each other. The first layer is the same Naira cost averaging the domestic investor gets. Fixed Naira amount each month. Fund price varies, units accumulate. The second layer is FX cost averaging, sending the same foreign currency amount on the same day each month locks in that day's Naira foreign currency rate. Across a quarter, the FX rate also averages. The diaspora investor who tries to time the rate, waiting for a better one before remitting, usually ends up worse than the one who simply sends the same amount on schedule. This is sometimes called dollar cost averaging in the broader investing literature, even when the source currency is CAD or pounds. The principle is the same: regular fixed amount deployments, regardless of price. A few adjacent options worth knowing about: a standing order or auto-debit through the Nigerian bank makes Naira cost averaging mechanical and removes the monthly decision point. Behavioral research consistently shows automatic execution beats discretionary execution for retail investors because the discretionary version inevitably gets paused exactly when the market drops and the deposit would have done the most work. The non-resident Nigerian investor account and non-resident Nigerian ordinary account exist for direct equity investment from outside Nigeria. A separate video on this channel covers them. Dollar-denominated mutual funds like the Stanbic Eurobond Fund exist for diaspora investors who want Nigerian credit exposure without Naira FX risk. A different instrument with a different risk profile worth knowing about. If you have made it this far, you are part of the small group who actually wants to do this seriously. Subscribe and the next walkthrough lands in your feed. And the honest qualifier: Naira cost averaging is a discipline mechanism. It is not a guarantee. Academic research consistently shows that in steadily rising markets, lump sum investing beats cost averaging on raw return roughly 2/3 of the time. Cost averaging wins when markets are choppy or declining, when the investor would otherwise panic stop, or when the investor cannot deploy lump sums because the capital arrives in monthly chunks from a salary. For most diaspora viewers building from a paycheck, that third condition decides the question by itself. Now, the dollar terms question. The Naira moved between approximately 1,338 and 1,394 per US dollar across the recap window. Broadly stable, with daily volatility down from over 4% in 2024 to roughly 0.5% now. The Naira ended April slightly stronger than it began March, which means my 17.5% Naira gain translated almost 1-to-1 into dollar terms. A diaspora viewer who had been remitting the same dollar amount each month would have seen approximately the same percentage growth on the dollar side, minus a small spread on each conversion. That alignment is the cleanest Naira FX backdrop for an equity fund recap in over 2 years. So what actually moved the journal across these 97 days? 3 things roughly. First, my discipline. 5 deposits, no missed months, no panic stop on the day 42 drawdown. Most of the change in the account number is my own cash going in. The structure works only if the deposits keep landing. Second, the broader Nigerian equity market. The NGX All-Share Index ran approximately 25 to 30% across this window, driven by the February rate cuts, the rotation out of fixed income as rates soften, and the Q1 broad bull run that crossed 200,000 points for the first time. The GT Equity Income Fund, with its concentrated NGX exposure, captured most of that direction. My 17.5% market gain underperforms the index because the cost averaging schedule meant my full 500,000 was not deployed for the full window. Capital was building up over time, so capital weighted average exposure was lower than full window exposure. Third, the mid-period inflation reacceleration. The 15.38% March print, ending the 11 months disinflation streak, complicated the rate cut narrative that had been driving the rally. The CBN's next Monetary Policy Committee meeting on the 19th and 20th of May will be the next major catalyst. The recap that follows that meeting will have the results: 500,000 Naira in, 588,000 Naira out, including today's fifth deposit. 87,683 Naira of that came from the market, not me. Approximately 17.5% on cost basis in dollar stable conditions. Day 42 was minus 4.87%. I kept going. The next deposit lands in approximately 30 days. So does the next recap. And if you have not subscribed, hit subscribe. There is a video like this every week. Diaspora investing into Nigeria, documented openly. Next, the May 20th Monetary Policy Committee decision and how it moved the journal. Drop a comment below. What number stood out most? And subscribe so the next recap lands in your feed.